Alright, so I'm making a video on SPX here, looking as far out as possible. So we know that this was obviously 1-2. 1929 crash here. That's 1-2. Third wave, definitely the great financial crisis, was the fourth wave. So we know we're in a fifth wave here. We're in the 6-month time frame. And I can't see this any other way now. I see 9 waves. 1, 2, 3, 4, 5, 6, 7, 8, 9. In Elliot Wave, you can have a maximum of 9 waves on a move. I asked Grok, because I wasn't 100% sure on this, can you have a diagonal at the end of this? Can this go 1, 2, 3, 4, 5? And I don't think you can. You cannot have that. You can have a diagonal, but it would have to be within this fifth wave. So it would have to be 1, 2, 3, 4, 5. And that might actually be what we got. Because remember this move, we zoom in here real quick. On this move, we did have kind of a weird move. So, no, maybe this part right here was diagonal, I mean. This does look like 5 waves, but you can't have a diagonal that extends even more from here. Meaning this can't be 1 of 5, this can't be 2 of 5. So ignore these. These are not right. So according to this chart, the stock market already topped out. We already topped out for the whole bull cycle. That's 5 waves in my opinion. So 9 waves here. And does that mean that we're going to crash all the way down to 2000 or whatever? I mean, technically it could. I don't think that's going to happen though. I think that some of these charts still have a lot more to go. So my thinking is we're probably going to get something similar to the 1929 crash. Ironically, we're about 100 years from that. I think we're in an A wave down here. I think we're in an A wave down here. And I could see a situation where we get an expanded flat. So we get like a 2 or 3 year, maybe quicker, a B wave up here. That's not a B wave. We get a down here to 4,400. We go like this up here. Maybe we hit 7,000. And then we get a 5 wave move down. So the tariff stuff is definitely the start of something. I do think it might resolve, and that's where we're going to get the bounce for the B wave. And then eventually we're just going to break down. There's going to be more tariffs. There's probably going to be other crises going on, maybe banks failing, who knows what. But I think we're in the first part of that A wave down. I previously said that this could be a diagonal, but I cannot look at this without seeing 9 waves. And you can look at it yourself on a 6-month time frame. It looks like 9 waves. If this were, let's say I was looking at it like this. 1, 2, 3, 4, 5. 1, 2, and we were looking for a third wave here. That would be up here at 7,500. However, the problem is, actually, I guess it's not yet. Did this come back in here? This did not break into this wave yet, I guess. So I guess that can be a secondary way of looking at this. That'll be the secondary way of looking at this. So we either topped out with 9 waves in the count I have, or this is a very shallow second wave. Let's go to the regular chart. So the second way of looking at this is 1, 2, 3, 4, and 5, like this. This came very close though to invalidating. You can't have a diagonal in the middle of a third wave. So if this count were to stay true, then that means we bottomed here at 48.40, and we're headed up here for a 5th wave to 7,500. Okay? And then that would be the overall third wave. Let's go back to the log chart. I think the other one makes more sense, but I'll go ahead and add this one there too. So this would be 1, 2, 3 would be up here. And then we would have pullback and another move higher after that. The reason I don't like that one is because even on the regular chart, let's see how far we retraced. It only retraced to the 0.3 fib. Is that really a second wave? So I'll leave that one as a possibility. It's still valid. Very shallow second wave. Fourth wave of the overall third almost came back into the first wave. It's still valid technically, but out of the two, I really like this chart the most. I really like this being a 9-wave extension, and we topped out for the bull market, and we're starting the move down to correct the entire bull market going back to 1871. But again, some of these charts though have not completed, so I still do like this being, or I still like this hitting new all-time highs. I just don't think it's going to be an impulse. I think it's going to be maybe ABC, pullback, you know, something up here like that, in order to make the B wave happen. Going in here on smaller time frames and looking at this move, get rid of this. Getting rid of this move, or going into this move, this right here is an A wave. Let's go to the daily. And another thing to point out too, I think there's a good chance this was a truncated move here. Some people might disagree with me, but I don't think it really matters that much because I think we're still making an A wave up. But I think that this 1, 2, 3, 4, 5, similar to what I said on Tesla, potentially a truncated move. It could also be ABC, but it doesn't really matter. I think that we're just making a corrective move down here, and we're going to eventually hit up here at 56.50, and then we're going to head down to 4,400. So it doesn't really matter. And then going in here on even smaller time frames, I think there's a good chance this is a triangle. A, B, C, D, E, and then we go up. You can draw a parallel line here. And you can see it's turning into a triangle. This is ABC, 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 A, B, C, like that. Kind of like that. If we get a move on Monday that comes down, if it goes like this on Monday, then I would just say it's a normal ABC move. So if we go up on Monday, triangle, down on Monday, we're finishing the C wave. And I think both of those, we should end up here into weekly supply around 56.40 at least. After that, we should be coming down to 4,400. If it ends up being the end of the third wave, then it's possible we bottom here. But I give that a very slim chance. That would make this a wave 1. And then you're looking up at this as being wave 1, wave 2, all the way up here to probably much higher, probably up here to like 6,600. And then again, 7,500 would be the target. So a massive move higher would be coming, but I don't think that's going to happen. So I'm still set on this most likely being an A wave down here, and then getting something like this way higher, probably up to 7,000 for a B wave over the next couple of years. And then after that, you know, crashing down here like that. So I gave you my logical reason why I think there's a better chance that the market already topped out for this bull cycle. When you look at like David Hunter and those kind of people that are making predictions of 7,000, I think that they have a very good, they're going to be probably right. But I don't think that this is going to be a impulse move unless it does the one thing I just talked about, which is we're in a fifth wave of the overall third wave. So those are my thoughts on SPX. It's either in an A wave or it is in a fourth wave of an overall third wave. So again, one more time. 1, 2, 3, 4, 5, 6, 7, 8, 9 top. A, B, C. Probably down here in this area if it crashes. Kind of like the 1929 crash. Or the second possibility is 1, 2, 3, 4, 5, 1, 2, 1, 2, 3, 4, 5, 3, pullback 4, and fifth wave higher. So those are the possibilities I see on SPX, and I'm leaning towards it already topped out, but I'm still looking for a massive B wave, probably starting later this year. That's it for this update. Leave me a comment, like, subscribe for more updates, and I'll catch you in the next video.